Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Bashardez. Shares on Wall Street are headed for strong weekly gains following the conclusion of the March central bank meetings that cemented rate cut expectations for 2024. After the European Central Bank paved the way for lower rates at the beginning of the month, the Federal Reserve and the Bank of England became the latest this week to not push back on market bets for a series of rate reductions later this year. The Swiss National Bank went a step further and announced a surprise 25 basis point cut, becoming the first major central bank to commence with an easing cycle, and even the Bank of Japan's much anticipated exit from negative rates was a dovish hike. The S&P 500 closed at a new all-time high for the third straight session on Thursday, while the Nasdaq Composite finished above 16,400 for the first time. The mood wasn't so cheery in China and Hong Kong, where stocks slid on renewed efforts by U.S. lawmakers in the House of Representatives to restrict investments by U.S. mutual funds in certain Chinese entities. Regional markets were also unnerved by signs that the People's Bank of China is loosening its grip on the yuan after it set a lower midpoint, triggering a tumble to just below the 7.23 per dollar level, the weakest in 4 months. The Bank of England kept interest rates unchanged as expected on Thursday, but Governor Andrew Bailey followed up the decision with an interview with the Financial Times, saying that rate cuts were in play. Bailey also appeared to endorse the market's view of more than one cut this year. It comes after UK inflation plummeted to 3.4% in February, with further declines expected in the coming months. The dollar has whipsawed this week, initially coming under pressure from a somewhat more dovish than anticipated Fed meeting, before reversing sharply higher. The first clue for another leg higher came on Tuesday, after markets were unimpressed with the Bank of Japan's tentative steps to fully exit from its stimulus policies, while the latest trigger came from the SNB's unexpected cut on Thursday that took the shine away from the Fed. Crucially, there's a greater risk of the Fed not matching the number of expected rate cuts than other central banks, given the far superior state of the U.S. economy. Thanks for watching today's market comment here at XM.com.